This video reviews Takeda's fiscal year 2025 second financial results, covering the period from April to September 2025. Takeda Pharmaceutical Company is Japan's largest pharmaceutical firm and one of the major global players in the industry. Takeda uses two standards for financial results: reported basis and core basis. In reported basis, the official results include all items such as one-time gains and exchange effects. On a reported basis, Takeda shows revenue of 2,219.5 billion yen for the first half, representing a 6.9% decrease compared to the same period in the previous fiscal year. Operating profit declined more significantly, a 27.7% decrease, and net profit also decreased significantly by 40% from the previous year, to 112.4 billion yen. In core basis, unusual or one-time items and exchange effects are excluded to reflect the company's underlying business performance. On a core basis, all revenue, operating profit, and net profit also declined. Despite these declines, core business is performing according to plan, and management is anticipating an improved growth outlook for the full fiscal year. The net profit progress rate is already at 73%. Although the full-year forecast was revised downward, at least the performance is on track as planned. Growth and launch products are Takeda's new or fast-growing medicines driving sales growth. In the first half, growth and launch products grew by 5.3% year-on-year at constant exchange rate, and an even higher growth rate is expected in the second half. Revenue from these products accounted for 52% of total company revenue. Takeda's 6 major business areas showed balanced growth with strong performance from gastrointestinal, rare diseases, plasma therapies, oncology, and vaccines, while Vyvanse generics weighed on neuroscience, and stronger sales are expected in the second half. In the first half, reported operating profit declined partly due to an impairment loss related to the company's decision to discontinue its cell therapy programs. Reported operating profit fell to 253.6 billion yen, a decrease of 27.7%. The decrease in core operating profit mainly reflected lower gross profit from products losing exclusivity. While Takeda achieved cost savings and reduced expenses, the loss of exclusivity and the impairment loss charge caused reported profit to fall sharply. Entyvio continued to perform well in the first half of fiscal 2025, supported by the steady uptake of the new subcutaneous pen formulation. Entyvio pen is a subcutaneous self-injection form of Entyvio, offering patients a more convenient alternative to intravenous infusion. Entyvio sales are expected to reach a massive 1 trillion yen annually. In the US, it remains the leading treatment for inflammatory bowel disease, covering both ulcerative colitis and Crohn's disease, although competition is intensifying. Patient use of the pen version is rising steadily, and demand in Europe is also growing despite rival products. Takeda is conducting new studies to achieve deeper disease control and to explore combination therapies using Entyvio as a foundation. Takeda also confirmed that it does not expect biosimilar versions to enter the market before 2032. Neuroscience business was significantly impacted by the U.S. loss of exclusivity for Vyvanse, which led to a major decline in sales as generic versions became widely available. This effect was felt not only in the US, but also in other key markets where generics were launched, including Canada, Brazil, and Germany, further reducing revenue. Overall, Vyvanse's loss of exclusivity has been a primary factor weighing on the performance of Takeda's neuroscience segment. Takeda revised its full-year forecast, mainly because of the impact of transactional foreign exchange movements and the impairment loss recorded in the first half. Takeda now forecasts lower revenue and profit figures compared with its previous outlook, revising reported operating profit from 475 billion yen to 400 billion yen and core operating profit to 1,130 billion yen. Reported earnings per share were also reduced from 145 yen to 97 yen, reflecting the non-tax deductible impairment recognized earlier in the year. Updated foreign exchange assumptions include a stronger yen against the US dollar and euro, which negatively affects profit. In addition, adjusted free cash flow guidance was lowered to 700 billion yen to account for an expected $1.2 billion payment to Innovent Biologics. Despite these adjustments, Takeda reaffirmed its dividend of 200 yen per share. In fiscal year 2025, Takeda prepares for several major late-stage pipeline launches that could significantly drive future growth. Rusfertide for polycythemia vera is in phase 3 trials and aims to provide rapid and sustained control of hematocrit levels, with data expected in March 2025. Oveporexton, an orexin agonist for narcolepsy type 1, could significantly improve treatment for this condition, with phase 3 data expected in July 2025. Zasocitinib, TAK-279, a selective TYK2 inhibitor for psoriasis, is designed to offer a new oral treatment option for psoriatic disease, with data anticipated in the second half of fiscal 25. This is one of the most highly anticipated medicines, with a peak revenue potential of $3 to $6 billion. These 3 drugs represent Takeda's next growth drivers, making fiscal 2025 a pivotal year as the company prepares for multiple innovative product launches. Takeda has entered into a license and collaboration agreement with Innovent Biologics for rights to IBI-363 and IBI-343, and has an exclusive option to license rights to IBI-3001. These rights are for worldwide use outside of mainland China, Hong Kong, Macau, and Taiwan. The transaction is subject to customary closing conditions, including regulatory approvals. This partnership could contribute to future profit growth for Takeda. Stock price. This chart over the past year shows the stock price in Japanese yen at 4,180 as of November 7. This chart shows the stock price in US dollars at 13.66 as of November 7. After the earnings announcement, the stock price fell slightly, but there was no significant movement. Current PBR is 0.93 and PER is 43.2. Dividend yield is 4.78%. Compared to previous years, the PBR, PER, and dividend yield are roughly the same. The dividend payout ratio has long been extremely high, which is a big concern, but so far the company has maintained a high dividend without any cuts. Conclusion. First half results showed declines in reported and core profits, largely due to Vyvanse generics, foreign exchange effects, and an impairment loss from discontinued cell therapy programs. Despite this, Takeda's core business remains on track, with growth and launch products driving over half of total revenue. Looking ahead, Takeda expects future growth from Entyvio, 3 late-stage pipeline products, and strategic partnerships with Innovent Biologics, positioning fiscal 2025 as a pivotal year for the company.